Hello everybody, McGee Wolf with the Wolf Group, back again with another video to help people make great decisions in the financing of their home. Great news is on the horizon. Americans are going back to work, and that is huge for many reasons. But as it relates to the mortgage industry, what is happening is the investors are beginning, the early stages, but they're beginning to loosen up a little bit. So that is wonderful news, especially for individuals that are getting government loans, FHA, USDA, VA loans, which are the higher risk loans. If their credit scores are between 620 and 679 especially, most people below 680 can't even get a government loan. We're still doing them down to 620, but nevertheless, interest rates are improving for them, and more particularly, they're not having to pay as much in discount to get those rates. That is a huge deal. So that's great news. Another piece of tremendous news is for us at the Wolf Group and Republic State Mortgage is we are bringing on a new we're bringing on a new government investor for those FHA, USDA, and VA loans that have tremendous pricing and very low interest rates. So if you're in the process right now, if you're a realtor and you have clients who are in the process that have credit scores in that range, you should really give us a call, because we are poised to really make an impact on the industry and offering tremendous terms for your clients, or for you for that matter. Or if you're someone looking to refinance, we can definitely make a big difference for you right now. Now, if we're talking about interest rates, each time I do one of these market updates, and today is May 21st, I generally show you a graph. You don't need to see it. You can go watch one of my previous videos in the more recent weeks. We're still trading the bond market in a very tight band, and there's been very little volatility. Kudos to the Fed. They've really done a good job to bring stability there. So, and as I've told you before, that is not dictating what the pricing is in the market for the lower interest rates, for the lower credit scores. Because as I said, the investors' appetite for higher risk loans is just really not, it's just not so great. So as always, focus on getting your credit score up and improving your overall situation, and plan ahead, get organized. So that could be very helpful to you. The final thing I want to mention is forbearance. I've talked about it several times, and I learned additional information. If you go back to my very first video I did on forbearance, I was concerned about how they would report this to the credit bureaus. And as it's turning out, there is forbearance language on many people's credit reports now. And in many cases, there wasn't anything in writing given to them. They just did it over the phone. They just agreed, oh yeah, it's going to be great. I don't have to make a payment for 6 months. Happy days. Everybody's relaxed. Well, if you're one of those people, you have to remember that investors can have overlays, and those overlays can say, if you were in forbearance, we won't do your loan. They don't have to adhere to any kind of other rules other than their own rules to mitigate what risk they perceive that you have. So what I've heard several people in the mortgage industry calling for is an adjustment to the CARES Act that requires these servicers to provide the terms of your forbearance in writing, so you know exactly what your impact is, what your terms are, what it's going to do to your credit score. So if you're one of these people that decide you want to take advantage 8 months from now of these very low interest rates, and you've got forbearance language on your credit report, it doesn't have to say that you were late. You can still have a great credit score. But if you've got that language, you may not be able to get a loan. So think very hard about whether or not you're going to accept that forbearance offer. But anyway, things are looking better, everybody. Real estate is going to be a big puller to our economy to pull us out of this economic situation that we're in. I believe interest rates are going to continue to stay low. They may even go lower than they are now as the economy improves and more and more people go back to work. I get asked all the time, what do you think is going to happen, McGee? And I think we're going to be fine, but we're going to have to stay focused and diligent and just take care of your finances, and everything's going to be good. So take care, everybody. Have a wonderful day.